Bitcoin makes a break to the upside, leaving some traders wondering if they just missed the long opportunity of their lifetime or if they just captured the best possible re-entry for a short position. These are things we're going to discuss in today's stream. Meanwhile, the Federal Reserve has ramped up the overnight repo market meltdown, and we talk about the soaring hash rate coming in from China in today's exciting episode of Breaking Bitcoin.
Hi everyone, I'm Naomi Brockwell for NBTV, and this is Breaking Bitcoin.
Hey guys, welcome to another exciting episode of Breaking Bitcoin. I am your host, Justin Wise. Hopefully you guys are having a fantastic day wherever you happen to be tuning in from. And whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app, if you want to support the show, make sure to subscribe over on the YouTube channel. Give the video a thumbs up if you enjoyed the content. If you're over on DLive or Twitch, make sure to give us a follow and participate in that live chat, guys. We've got a great show for you today. Before we get started, of course, I want to talk about what's coming in tonight on our Discord. If you guys aren't in a Discord, make sure to go hop and join in over there at discord.crackingcryptocurrency.com. But we are going to be instituting a verification channel tonight. So if you join our Discord, all you'll have to do is answer a simple question to be granted access to everything that our Discord offers. Existing members, the reason that I do want to give this shout out and notification is because existing members will need to do that as well. So if you've been in the Discord for a long time, at some time tonight, you'll see kind of everything flash and you'll see a new channel pop up. It'll be the verification channel. If you want to continue to access everything, you just got to answer the simple question in there just to verify that you're a human person, because we only like humans in our Discord, guys. All right, before moving on from that, if you guys want to follow along with everything that we're doing, make sure to go check out everything that we do in the group at premium.crackingcryptocurrency.com. Now, let's get into today's show because it's going to be a good one, guys. And something that I want you guys to... Oh, by the way, ByBit Brawl is officially concluded. I want to give a huge shout out to all the winners in our group who participated, those who weren't in our group that participated, who are just fans of the show, who are friends of what we do here, friends of the community, members of the community who participated. We had a lot of fun. It was a great opportunity for a lot of individuals to trade closely together, to share their setups, to trade a little bit closely. Obviously, a little bit of a distance from what we do, looking at the lower time frames. But a lot of you were able to pull that off with great success. So, very proud of all of you. And, overall, the results are exactly kind of what I wanted to see. We've got some individuals that did very good, and then a lot of individuals that did okay, which is exactly what we want to see. Because what that means is that you are actively pursuing this method of trading. You're not spending your whole life in front of the charts. You're actively managing your risk, and you're looking for consistent, steady compounding results over time, rather than any sort of brief, fleeting dream that you can get rich quick, because those opportunities just do not exist. So for those of you who participated and did good, congratulations. You guys did amazing. For those of you who did okay, I would actually be far more positive about that, because again, what that means is that you did not allow some minor event, I'm going to say minor event, but you didn't allow anything outside of your system to influence your risk management or your trade execution strategy, which is exactly what you want. You want to build that discipline to be executing consistently the same way day in and day out. And that, in the long run, is what is going to make you a consistently profitable trader. Individuals who got really ramped up and excited about that, and we saw there were a few individuals on there who got ramped up and excited about that, and we can tell did not have their money management or risk management in check and ended up incurring some loss. So if that was one of you guys, what that says about your strategy is that you do need to kind of revisit your underlying money management and trade execution system before you begin trading live again. All it means is you need to take a step back, review what you're doing. It's also possible that what you're doing on there doesn't really reflect from your overall account balance. That's a question and answer that only you can answer by journaling, by keeping notes, by recording all of your trades as you're supposed to, and doing overall exactly what you're supposed to be doing as a consistently profitable trader or as a disciplined trader. Building the discipline leads to consistently profitable over time. You put in the work and it does the work for you. All right, so I want to thank our continued crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io for all your security needs, especially if you are a developer, if you have a coin project, they are the people to go to. So we're going to go to yesterday's video and select whoever got the closest guess of Bitcoin's price at the open of the show. Let's go, guys. All right, yesterday's video, Bitcoin bulls are struggling. Jack Dorsey and decentralized social media, Nike and crypto, and BTC custody. All right, thanks guys for participating. Let's scroll down and see. First off, let's just double check. Go to the 1 minute chart here and see what was the opening price of Bitcoin at the show. We're actually on ByBit. I said we were going to do it on Coinbase. Pardon me. Shouldn't be a huge discrepancy, but here we go right here. And it is going to be 72.69. 72.69 is the winner chicken dinner. So let's go back over 72.69. Rickie Thompson's looking pretty close. I would say that looks like Rickie Thompson. Let's see what our answers are. Again, generally same thing. You guys are very intelligent. You guys are generally predicting that volatility is going to remain low, not banking. I can tell from these predictions, not banking on a massive breakout or anything like that. Mr. Ether asking me to look at data USD. Very risky, but I think closer to ready to pump. Thank you, man. I'll definitely check that out. But yeah, Rickie Thompson seems to be, Rickie Thompson seems to be the winner with 72.58.65. Very precise, my friend. Looks like we're heading to the top of the channel on the lower time frames for a third retest. Thank you so much for participating, my friend. You know the drill. Get a hold of me in the Discord, and I will tip you some crypto, my good friend. All right, into the live scene. All right, cool. Let me get everything pulled up. We are on live stream. Let's give this a refresh. There we go. Okay. Cool. Exactly where we want it to be. Exactly where we want it to be over here as well. Okay, great. So how are you guys doing in the group, my friend? Let's give the shout outs to the viewers of the stream today. We've got Wendy, David Rice, Mr. Ether. Dark Rico is in the house. We've got Mr. Ferguson. How are we, my friend? Crypto Jack, Mastache as always. People hopping over to D Live. Michael Naranjo, Aditya. Rickie T is in the house. Satoshi Nakafomo. Good to see you, my friends. Hopefully you guys are having a fantastic day because we did it, guys. We made it to another Friday. It is Friday. It is the weekend. It is time to relax, chill, and look for what often is a little bit of weak, low volatility upside momentum. Now, again, low volume upside momentum is often what we do experience, especially with altcoins. Altcoins have been good to trade on the weekends for quite a while now, at least anyways, for those of you who are just looking to trade over the weekends, not looking to open up long positional swings, which I generally am more averse to open up on the weekend because the reason why is because the weekend is low volume. Low volume incites high volatility because there is just less willing buyers and sellers at any given particular price, and that is what causes increased volatility. The thinner an order book, i.e. the smaller amount of market participants, the more volatile an asset is going to move. And this is why Bitcoin moves with such high volatility relative to something like a Forex pair or the S&P 500 or generally any traditional stock. You see that kind of volatility in penny stocks, right? Or other, again, low volume assets. You get high volatility. And again, that's why a lot of people are here. I mean, the percentages that these things move consistently on a daily basis can often be quite dramatic. And again, that's why people are here. But that's why, and again, what we preach here is risk management skill. You absolutely need that to survive and to thrive in this space, in this market. And for those of you guys watching the show, you fall into that category because otherwise you would be watching something different. You would be watching some To the Moon. All right. Anyways, let's go over to the daily because something is coming in interestingly on the daily today. Let's go over to the Coinbase chart. We'll get rid of Quadrigo and we'll largely minimize this. And let's just take a zoom in and let's take a look at something here. So we're getting something from Waddah Attar that we have not gotten. Let me actually give this refresh as well. Hold on. Shucks. Well, I guess it's not going to do it, but okay, whatever, doesn't matter. We're getting something here from Waddah Attar that we have not seen in a while. And if you guys look closely, what this is a rising explosion level, right? And not only a rising explosion level, we started to receive a rising explosion level yesterday, but now we also have a green column printing above the explosion level. And we have not seen that since Let's see here. We have not seen that since the 24th of October, 2019. What was that? That was the top of the Jericho candle. But the explosion level did start rising prior to that. It actually started here on the 27th of October, 2019. Of course, at that point in time, the momentum was pointing us to the downside. And we've talked about the Jericho candle before. We've talked about, again, from the daily perspective, swing trades like this are nigh. I don't want to say impossible, because then a million people will come out of the comments and say, look, man, if you had just used X, Y, and Z strategy, you would have caught that. I'm just saying that this isn't necessarily, if you just look at that movement from any lens, that is fairly erratic, random, and an anomaly. It didn't have any follow through. So that is not a trend. That wasn't a bullish trend. That was a pump to get short on, right? I know I've seen some good correlation between the CME futures and the correlation that there's a new sheriff in town, and that we do have quite a while to, a few more weeks to go. Kind of the same thing that I talked about as well. A few more weeks of low volatility and continuing to consolidate in this range before the contract expires, and we do get a new position in the market. So overall, let's go. Let's kind of start from the top down, as we are wont to do. The monthly is still bearish. So from a macro perspective, we are still quite bearish and looking overall for lower targets. That's the posture and the position that we have to have in the market right now. So that means that fundamentally shapes the way that I am trading. I am not overly excited. I am low risk if I'm going to take any trades to the upside. I am not believing that this trend will snap and that we're going to enter into a bullish phase. I have not seen the evidence yet to convince me of that. Now, you also have to recognize that I am a systems trader. So this isn't coming from my crystal ball. This isn't coming from my discretion. This is coming from the indicators that I've utilized for years to be a consistently profitable and professional trader. So when the indicators change, so will my sentiment. But all of the factors right now pointing us down to the lower levels. And our first ATR target is going to be pointing us to 4,900. Of course, we've talked about some other concepts as well. When we do look for levels of supply and demand, which are significant in cryptocurrency, and we utilize a tool like VPVR, of course, we do have our point of control on the monthly, daily, weekly, doesn't matter. It just gets more nuanced depending on what section of the market you look at. We, of course, do have the area of current demand at 6,400. Of course, we have not approached this level on high momentum. So this is something that we talked about. Again, remember how we talked about it is the nature in which you approach support or resistance or supply and demand that often dictates whether or not you reject from it or blast through it, right? And as you can see, back on the way up, even traders like myself, made a fairly large deal about that $6,000 area and how it would likely act as a significant level of resistance. But when we get off the monthly and we go look at the daily, we can see that we exploded toward that level, and thus a strong contribution toward why we blasted through it. Now, obviously, every moment in the market is unique, but I'm just saying that it did again play out with that same factor. So things to be aware of. Now, if we look at how we've approached support, conversely, or supply or demand in this aspect at 6,400, again, the exact same point of control that we contested with back in the consolidation phase from the latter half, Q3 and Q4 of 2018, and the area that we broke up in April of 2019. We can see, again, quite very different things. In 2018, we descended to that level quite slowly, grounded out, and broke down. And what we've done right now is, again, descend toward it very slowly, consistently, ploddingly, trudgingly on the monthly. And this does reflect, again, still a continuation of this overall bearish trend. We need to see something quite dramatic, generally consolidation on the monthly or the weekly, to see that overall trend change and a bullish trend emerge. So, I would be very, very, very adverse to be putting on those bullish caps just yet, sir. We haven't seen really anything positive from a higher time frame perspective, and it's very simple, guys. It's as simple as that. Calling tops and bottoms is not the way to trade this market. Patiently trading the trends and following what the macros are doing and developing your strategy based on that, based on what the actual market is telling you and not what your gut tells you, is the way to go, in my opinion. Weekly. We're going to be getting a weekly close here on Sunday, but most of the actionable data is here. The weekly, we are closing below the baseline. We did reject with a reversal baseline bounce setup here. As you can see, this is the 20-period Hall moving average. Let's turn VPVR off because that's now not germane to what we're talking about. Again, we did pull back to the weekly baseline, and we are rejecting and closing below it. Still a bearish rising explosion level here on Waddah Attar Explosion. Commodity Channel Index is bearish, and Minx as well is also bearish. So nothing positive here coming in from the weekly. But on the daily, the tradable time frame, we do have something interesting happening. Now, there's nothing confirmed yet. There's nothing confirmed yet. But on the daily, we are getting a rising explosion level and a green column being printed above it. And again, we have not seen this. This is, in Waddah Attar strategy, always the signal to go long. Always the signal to go long. We can see it over here. We can see it here. We can see it here. And we generally get very good follow through. I know that many of the traders in our group do use Waddah Attar either as a confirmer or as a raw initiator, right? And it tests fantastically on its own. It doesn't mean that every trade is a guaranteed win, but it does mean that it gives very, very good independent signals of its own. And in fact, that's an indicator that you can, even if you're not in the group, go apply to your charts right now and begin using. I have a tutorial video here on YouTube on how to use every single component that I've coded here into Waddah Attar Explosion. Now, there are a couple discriminating factors here. First off, MINX is bearish. Commodity channel index is going to be closing above the dynamic zero line, though, and that is a buy signal from CCI itself. Okay. Now, so that means that of the 4 indicators that we have on our chart, half of them are signaling a bullish trade. Now, MINX, which is my primary initiator, is signaling no such trade. In fact, it didn't even go. One thing that you can look at sometimes with MINX is that when it does go below negative 100 and then comes back above, that is, generally very same concept. You have an indicator that goes into an oversold region and then pulls back. Again, the default visual aesthetic of this does display those overbought and oversold levels. Time transformation is also really good for this. I'd be interested to see actually what time transformation is saying about the market right now. Let's go take a gander. Nothing really fantastic. Nothing really fantastic. Time transformation was throwing up strong buy signals right here at the local bottom because it is designed to be a reversal indicator and called tops and bottoms. Of course, it can also be used as a trending indicator. It did accurately call hidden bearish divergence on both of these tops, as you can see here from the small H's. This calls bullish and bearish divergence as well, both hidden and primary. And we don't even have a cross up yet on time transformation. So no such signal from time transformation, very similar to MINX in this particular situation. So overall, this is letting us know that although there might be a play here, the trend to the upside is extremely weak, and MINX is signaling no such trade. So in this particular situation, it is okay, but again, there is one other primary discriminating factor too, and that is the baseline. We're not closing above it. Now, for those of you who are utilizing different baselines or directional lines or trend lines, whatever you want to call them, not to be confused with the drawing trend line, you would not be taking this trade. You would not be taking this trade because we are not above the midpoint of price, which is what the baseline is supposed to determine and supposed to tell you when exactly you're allowed to open longs and not open longs. So getting a close above this price level, again, on the daily, about 72.90 here on the Coinbase chart. Getting a close above that, you could be taking then a 3 of 4 trade because then you would be above the baseline. Waddah Attar Explosion would be signaling long, and your confirmer would be signaling long. Now, this is not the traditional way to do this. Traditionally, you always need your initiator to be giving you the signal. However, in crypto, this is a strategy that one can apply. But keep in mind, if one does take this trade on the daily, this does not and should not influence whatever your macro trade is. So your positional short should not influence that. So you'll either be needing to subtract from the amount of contracts you have short to take advantage of the upside, and then adding those back in instead of taking profit is what you would do. Or you can actually utilize a secondary account. But the funds that you use to take this position long, if you do so, should be hedged, right? So you should be trading from a cash neutral basis, whether either you're doing this directly from USDT or USD and just trading Bitcoin spot. But if you're doing this on a derivative exchange, the funds should still be hedged with a short sell. So either you need to be trading directly from cash or you need to be trading, you need to be holding spot BTC, but having that BTC hedged with a short sell on a futures contract of your choice. So for me, this is not going to be a setup that I'm going to be taking. I do not have the confirmation that I need, just something to be aware of and watch. Now, it is possible that this does get immediately sold into, but we don't, the entire point of what we do here is that subjectively, we don't know what the market's going to do. So what we design is systems that are allowed to give us a statistical edge. And the Waddah Attar Explosion signal is a statistical high edge of a successful, profitable trade. Doesn't guarantee anything. but it is an edge, and it is one to watch for. Now, that edge is sharpened when we apply these filters, as I've talked about, whether the baseline or other indicators to confirm bullish or bearish activity. So I am going to need Minx to go ahead and give me the go-ahead on this. This is not a trade I'm going to be taking unless we get a dramatic change on the daily. Say we do end up, marching up here and closing. Minx will still likely not be giving a signal at that point in time. So that's where I'm sitting at with that. Getting rid of the baseline here for a moment and looking at our EMAs. Nothing has really changed insofar as our EMAs have. Hold on, I'm trying to find these. There we are. So we are still below the 13 daily exponential moving average, which most individuals are using as their baseline, and still below the tertiary baseline, the 21 EMA, which I've talked about at length. And again, that has been the current level of dynamic resistance for BTC's price, rejection over here on the 28th of November, and rejection here on the 6th of December with an inverted hammer candle as well. And then a nice stop loss hunt to confirm that right before the movement to the downside. We talked about that actually when it happened, before it happened, and then after it happened as well. Now, the discretionary trade that I do have on the table is actually getting into a long above, a daily close above the 21 EMA, taking that up to the daily 55, and then shorting from there. That is the setup that I'm eager for, that I'm looking forward to if we do get a little bullish expansion from here. But overall, on the weekend and moving into tonight, I'm just going to be waiting, watching patiently, seeing what my system indicates, and only looking for that discretionary trade, staying macro hedged, and otherwise looking for opportunities to get short. If this movement does fail, then I would expect to see a lower low from this area. If this movement does fail at the 13 or the 21, then I can be looking to one could be looking to get short from there as well. For that, again, that's a discretionary trade. You'd have to be monitoring price a little bit closely for that. The other setup too to talk about is, and this is just taking the reversal baseline bounce. Right? We talked about this. Where do we currently reject from just right now? We just rejected from the baseline. You could have taken that trade. You could be in this trade right now. And then if the daily closes above, you're out of the trade. It's not a discretionary trade. What was the section called for Trunker's explanation of how to long while the account is hedged short? You should just be able to go to the Discord, mate, and yeah, you should just be able to go to so his channel is Trunker's Lair, and it's still the most recent post. It's a great write-up on how to hedge using multiple accounts, using the same account. And you can guys go check that out at our Discord at discord.krakencryptocurrency.com from our junior analyst Trunker. Okay, so that's about all we have coming in on the daily. That covers the macro and the daily time frame. Getting over to the 4-hour chart for those who are trading the Meso, we did get a Minx long signal over here at about 2000 UTC time so yesterday, 2000. So right before the daily close. So at 2 p.m. my time, we would have gotten that signal. Long signal on Minx on the 4-hour, above the 4-hour baseline. No confirmation from Waddah until the very next candle, so you would have actually had to take this on the daily close yesterday. CCI was giving the go-ahead as well. And as we can see, again, these lines right here are CC EMA with the multi-time frame feature, so we're looking at the daily EMAs. We're actually going to get rid of the longer ones so that price isn't being compressed on our chart here. There we go. That's a little cleaner. And again, I think a good take profit area right here around the 13 and the 21 over here on the Coinbase chart. Again, just remember to get your levels right depending on what chart you're looking at. But again, these levels aren't going to be different. And yeah, looking for that good take profit right there at the EMAs, and then also Quadrigo would have had us getting out. Let's see on the signal. Yeah, we would have already hit TP1. So for those who took the 4-hour long, TP1's already been hit. Moving your stop loss to break even is what we want to be doing here right now. On the 4-hour, though, still falling explosion level. Now, one thing to point out here on the 4-hour is that the explosion level is extremely low. This is very similar to something like average directional index or ATR or Bollinger Bands, letting us know that on this time frame, volatility is very, very, very low, and that's often what happens before a large movement. Now, as a discretionary trader looking at this right now, I would be looking at this area. I would be excited again, kind of for that tertiary rejection as well. I think that's what a lot of traders would be gearing up for right now. That's what I would be interested in as well. Again, for me, monitoring the daily because this area is fraught with peril, and that's just the safest maneuver right here. There's a lot of other good trade setups that we're in and positioned in. Let me actually go take a look at my live open trades. And yeah, like on my live open trades, for example, you know, we're still riding Zcash to the upside. We took Quantum USD last night on Binance US. That's up 6%. Waves and Atom, those are all doing quite nicely. Yeah, I mean, up, you know, my personal trades, I'm up about 18.49% right now. I wonder if I can show you guys that. Studio mode. Oh, whoops. Yeah, there we go. So for me, there's really no need to take these LTFs until, you know, what I'm working on obviously is the process of automating all of these. So these will all be done in conjunction, obviously, with our advanced risk management system. So, but again, for those who are manual and those who are being a little bit more active on the 4 or the 2, they're doing quite well. All right, get rid of that for now. But again, coming up to that first TP, so one kind of has an option here. One can take that profit, take the 50% of profit, move the stop loss to break even, and look for the upside. But I don't think that looking at kind of this area between 7,300 and that tertiary baseline, so 7,300, 7,350, let's just kind of round up. Looking for a short entry there, kind of looking for a stop loss hunt above this high, above this Darth Maul candle high, and looking to take that back down into the range. That's going to be, again, that's going to be the overall reversion to the mean strategy in this type of market, in this type of range, reversion to the mean, you know, short every high, long every low until the trend breaks. And that's the first time that you're wrong generally with that strategy. You just have to make sure that you're not ignoring the trending signals from the other time frames so that you are in the correct position so that that final loss is compensated by that first win, right? Other than that, still overall, in my opinion, not a lot to write home to mom about. Not a lot to write home to mom about. Low volatility, low volume, causing a lot of individual traders to kind of get a little like, oh, I like hate this, but you guys just need to seek your opportunities elsewhere. Like, for example, the altcoin markets are popping right now. There's a lot of opportunity over there. You know, and I think you guys are missing out. And we're moving into Saturday where altcoins tend to pop even a little bit more. You got to, you know, obviously apply your risk management more carefully than ever over there with altcoins. And you also have to apply your actual trade execution and be taking raw signals. There's no need to just buy altcoin just to buy altcoins. But you need to work this into your daily strategy because there are opportunities outside of Bitcoin. All right, if you guys have any questions, make sure to pop them in the chat and I will get to them in the Q&A section right after the first break. But with all of this kind of confusion, I think, from a lot of traders about the market, I think it's a good opportunity to go check in with our junior analyst, Midwest Attempts, for today's Bitcoin weather report. Jason, what do you got for us today, my friend?
No, you drink it. You drink it. Oh, hey, Justin. We're having a great time out here. I'm telling you, I just killed a 1% short off the 15-minute, and I am on fire, baby. Oh, yeah. I'm telling you. Wait. Pow, 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 pow. Who's got more money? Jason got more money. Who's got more money? Jason got more money. Back to you.
Ah, good to see there, man. Good to see, my friend. Starting the weekend off early, I see. Well, you know, you made your second place in the ByBit Brawl there with about 21% P&L in 2 weeks. So, yeah. You party on, brother. You party on, man. Party on, Garth. Yeah, celebrating a little early. That's cool, you know. You're bringing in the big bucks like that, I guess you party safely, man. Trade safely. All right. All right, guys. We have a lot of fun. Okay, now, with that being said, guys, let's get into today's cryptocurrency segment and break down the news that is infecting the market today. Let's go. All right, here we are. Our first story today comes to us from CNBC Markets, so you know it can be trusted. So the New York, this is about the Fed ramping up its repo operations. We have talked extensively about the liquidity crisis in the overnight repo markets, and really that being the completely ignored factor that I do not think, even though, again, this is in CNBC Markets, this is not being talked about as it should be. This is a massive problem in our economy right now. This is a banking crisis because it's exactly this sort of behavior that foreshadowed. Again, you had other external factors back in the 2008 financial crisis, like the CDOs and everything that was happening at that point in time. But all of the absolute trash securities that were flooding the market. There is less of that now, but the problem is still with commercial bank liquidity and this overnight repo market. And this is a crisis of confidence. The Fed has stepped in blatantly to completely avert this. And exactly, it was the Fed stepping in previously that led to the collapse of the market in the first place back in 2008. Now, and that led to TARP, and that led to everything that could occurred. And again, I just want to point out what was 2008 for those who were prepared and those who were positioned and those who were managing their downside. It was an incredible buying opportunity. It was an incredible investment opportunity. Anybody who entered the traditional markets in 2009 and 2010 has had a roaring almost decade of absolute success and nothing but gains. Absolute success and nothing but gains. And it's just, those are the opportunities that one needs to be aware of. Very similar with any dramatic price drop on Bitcoin, any dramatic price drop on assets that you guys are interested in, commodities, precious metals. There are multiple ways to be a trader and be an investor, and taking a comprehensive view, thinking for the long term and building a portfolio that will weather the storm and that will last and will allow you to profit on downside and limit your downside is the overall goal of everything that we do here and what I've done as a personal investor. But we do have an update on the situation. And again, I encourage you guys to definitely go check out the previous videos where we've covered this. I'll do my best to drop some links down in the description below or put a card up on the rewatch. Now, the New York Federal Reserve Bank has just published its latest weekly entitled The Statement Regarding the Repurchase Operations. And this document lays out the Fed's expected repo operations going into year's end and into the new year of 2020. And according to this statement, the Fed will continue to offer 2-week term repo operations twice per week, 4 of which spanned to the year end. In addition, the desk will also offer another longer maturity term repo operation that spans past year end. And the amount offered in this operation will be at least $50 billion. So not reducing the amount whatsoever, ramping up. Now, this is being done to prevent a cascade as we move into the year of end. There are often liquidity problems, not crises, not issues, but problems. And what they are trying to prevent with the current state of the overnight repo market is an absolute liquidity seizure, which is going to result in a cascade of bank defaults. That's what happens. The Fed overnight repo operations will continue to be held each day. And just to be safe, the Fed is going to go to town by substantially expanding the size of these operations. On December 31st and January 2nd, the overnight repo offering will increase to at least $150 billion to cover the turn in a flood of overnight illiquidity. So in addition, on December 30th, 2019, the desk will offer a $75 billion repo that settles on December 31st and matures on January 2nd. And just in case that's not enough, so hopefully you guys are understanding, the Fed is committing all of this money, which is not a solution. The Fed is acting as a Band-Aid. And what problem here, the crisis for me, is that they haven't been able to figure this out. Now, these things do take time, but I don't see the solution on the horizon. And when this game of musical chairs ends, it ends with panic. It ends with crisis. It ends with default. That's how this works. So, but just in case that's not enough, the New York Fed's market desk has also added that, quote, it intends to adjust the timing and amounts of repo operations as needed to mitigate the risk of money market pressures that could adversely affect policy implementation consistent with the directive from the FOMC, end quote. Now, basically what that means in real speak is that they have published this to basically try to say that we've got this figured out. We've got all the plans for this. No problem. We've got the money. We've got it allocated. You guys do not have to worry. But with that statement, they're basically saying this could get really out of hand. So we're just saying right now that, we might have to do this on the fly. And that's concerning. That's extremely concerning. Now, what the Fed means by this in more clear terms is that in addition to expanding the sizes of their overnight turns to 150 billion, they're going to be conducting a total of 9-term repos covering the year-end turn from December 16th to January 14th, and 8 of which are going to amount to about $35 billion. The first being $50 billion all on its own for a total injection from the New York Fed into the overnight liquidity market of $365 billion in the coming month. All of this adds up to the largest series of repo operations ever between those newly announced year-end liquidity injections on top of the currently existing repo programs, as well as stuff that we didn't even talk about. T-bill repurchases. The Fed is committed to pump $50 billion into the market there over the next 30 days. So what this means is that by mid-January, the Fed's balance sheet is expected to climb to near $4.6 trillion, surpassing the former all-time high of $4.5 trillion. So all of those plans to walk down the balance sheet has been completely thrown out of whack by this commercial bank crisis. And the question now that we have to ask ourselves is, will this kind of Hail Mary approach be sufficient to avert a repo market disaster, which some, including myself, are predicting will trigger an even larger intervention in the form of more quantitative easing, the fourth phase of quantitative easing? Or or is it possible that this final monster injection of liquidity into the markets will be enough to cover the turbulent year-end finances of the system and smooth things over long enough for the banks to regain their footing in early 2020? One thing is extremely interesting for certain. With Bitcoin in the area that it's in, about to break down, people are calling for an immediate pump from this area. Either way, definitely Bitcoin itself, as well as precious metals and the stock market. Look at the stock market, all-time highs. All-time highs as of right now. But this is going on in the background and nobody's talking about it. One thing is for certain, ladies and gentlemen. The next 30 days will be extremely, extremely interesting. And if you haven't taken steps to protect your traditional investments yet, and you're watching this channel maybe for the first time, or maybe you're being lackadaisical in your approach to Bitcoin, or diversifying your portfolio, now is the time. Now is the time. If you're only holding traditional stocks, you need to be looking into other options. Precious metals, I love gold. Bitcoin, I love crypto. Those are two great options. Silver, platinum, palladium, Ethereum, Litecoin, Monero. Diversify. Have some holdings. Get some short sell ETF stocks. You can get an ETF that mirrors the S&P inversely. It's a great way to hedge your account. If you're just primarily long and you're not an institutional investor, you don't have the access to short sell stocks, you don't really want to do that, just get an ETF, man. You just get the inverse ETF. Pick up some gold if you haven't already. Grab some Bitcoin. Don't go all in on any investment, because what you want to do is not lose your shirt if and when this goes down, if and when this culminates in a very negative action and we have commercial bank defaults. Because if you are protected when the market tanks, you will see it for what it is, and that is a buying opportunity, instead of being forced to panic sell at the bottom, as so many have done time and time and time again, because they refused to take the steps in advance when the signs were clear. Be safe out there, diversify, and invest wisely, and don't ignore this information. Now, on a slightly lighter note, our second story is coming in today from Crypto Briefing. And this is going to be talking about Bitcoin mining centralization reaching record levels, of course, the majority being in China. So, according to a newly released research report from CoinShares, Chinese Bitcoin miners now control a record proportion of the Bitcoin network's hash rate. And this is an estimated 65% of Bitcoin mining now happens in China. Now, CoinShares noted this as an all-time high, at least since they first began monitoring the network in late 2017. Now, an earlier study published in 2018 by researchers from Princeton and Florida International University estimated that 74% of Bitcoin hash power is managed by Chinese mining pools. However, these figures were a very poor gauge of mining centralization because miners from any geographic location can participate in these pools. So we're actually looking at where the physical process of hashing of mining is occurring, not those participating in pools that are hosted or based in China. So that number was actually quite too high. Now, mining is predominant in China, partly due to the fact that most ASIC mining hardware, which is required currently to profitably mine Bitcoin, is manufactured in the company. Big names such as Bitmain, Canaan, and MicroBT dominate the mining hardware industry and have for quite a while. And due to this, Chinese customers tend to get preferred pricing, and they avoid the friction of tariffs and shipping, according to sources. Again, many miners know this just to be the case. Meanwhile, and I would say that the biggest actually aspect of this is that there is extremely cheap hydro-powered markets in regions like Sichuan, in the Sichuan province. And that is probably one of the best places in the world to deploy mining hardware. And again, another reason why we've talked about this before, everybody talks about how terrible for the environment that Bitcoin mining in particular is. But the reality is that the majority of Bitcoin mining is being powered by renewable energy in the form of hydroelectric power in China, right? It is not the majority that is being powered by gas and coal. That is a much smaller minority of the overall network hash rate. And that is an estimated 54% of global mining shares happen out of this region of China alone. So of the 64% of mining in China, 54% of so that would be almost 90%, but of the 54% of all mining being powered just in that region of Sichuan, which represents in total all of the hash rate in China, 65%. So that is a dramatic portion of the market, and then we're not even factoring in the other remaining hash rate distributed around the world that is also running off renewable energy as well. So this is a quote from mining expert Christy Lay Minihan to Crypto Briefing, quote, "The centralization of hash rate, according to her, threatens the ultimate promise of the network, that no one party or group controls the ledger or flow of transactions. Any number of natural disasters or state-level threats could introduce network turmoil, whether through increased block times, transaction costs, or transaction censorships at the state level." Now, these figures would tend to run contrary to a narrative that the United States is on the rise as a mining hub that could challenge China. In October, Bitmain launched a 50 megawatt facility in Texas. Most of you guys don't know that. Just last month, Northern Bitcoin AG and Whinstone US merged to open up a 100-acre facility for Bitcoin mining in the same state. So Texas repping it hard down there. But there is another little fly in the ointment here, and that is the trade war. The Cold War, as you will, today's Cold War, between the United States and China. And this is jeopardizing the American mining industry. Growing tariffs on hardware is harming the profit margins of US-based mining operations, has from the beginning, continues to this day. Also electricity costs. But again, that is largely mitigated because these firms have done the analysis to understand this beforehand. Now, it is unknown at this point in time whether this particular centralization of hash rate in China will actually impact the trajectory of Bitcoin. However, this is probably one of the hotly debated, contested issues in cryptocurrency. The crypto space as a whole is seeing a great deal of its innovation and development coming from China, a nation which has become a high-tech manufacturing hub over the past several decades. In fact, similar concerns threaten more than just the relatively small crypto tech sector. The technology supply chain in totality, including military-grade hardware, has been said to be compromised by Chinese industrial-scale spying operations. Now, when it comes to matters of high technology, China is attempting to take the global lead. and the consequences are being felt across a variety of industries, some of which present an even greater existential threat to society than just the BTC hash rate. Now, I've talked about this a lot. I've talked about these factors a lot. But I want to know what you guys think about this. I don't want to tell you what to believe on this. I don't want to tell you what to believe on this. The nice thing about all of this, the nice thing about life, the nice thing in life in general, and this is something that I say to myself a lot, I'm not too overly concerned with this. This has been largely the stake for a long time. And I think that people need to open themselves up to the idea. For example, look what we're seeing in China right now with this CBDC being launched. China is the first country moving forward this year with introducing its central bank digital currency to the ecosphere. Are they going to crack down on Bitcoin mining? Well, they haven't. We'll have to see and test the winds. But here's the thing. That's not doom. That is potentially the answer to this situation. Because when that happens, again, buying opportunity on Bitcoin. We're in the thralls of minor capitulation. And I guarantee you, if the mining hardware is attempted to be taken over, how do I put this? How do I put this in a way that makes sense in my brain? And I'll just share that. And you guys correct me where I go astray. But if mining is cracked down on in China, what does that represent? That represents an opportunity to enter into the space of mining as an industry that has not existed for quite a while. Because what will happen? The hash rate will drop. That will lower the price of mining hardware. A lot of mining hardware will go on sale. A lot of individuals will pack up. A lot of individuals will lose faith. And what does that always represent? We just talked about this with the traditional market. What do those opportunities of crisis represent? The Bitcoin network, the Bitcoin protocol, everything about it is valuable, right? Everything about it is valuable. So what do crises represent? Buying opportunities, right? Not opportunities to go all in. Not opportunities to go all in, but opportunities to take calculated risk, because that is how you get ahead in life. You take calculated risk. Nothing ventured, nothing gained, as is always the case. So I would kind of look forward to this to heat up. I'm interested to see. I'm curious to see. I am waiting. I am patient to see how the situation plays out with China. I don't know how it's going to play out. Nobody does. I do know that this doesn't, again, directly affect the current state of the network or the trajectory of Bitcoin, from my personal opinion. In fact, largely, as far as mining operations are concerned, I think that China has taken a far less aggressive stance than the United States would have if mining was centralized in the United States. We already know, we have reports already that the executive branch already looked into trying to shut down Bitcoin back in 2012. But the complications of that with the global distribution of hash rate was too untenable for them to actually move forward on that project. You can imagine, what would the cryptocurrency space look like if hashing power were centralized in America over the last decade? Things to consider before we run screaming for the hills. But my point here is, when people do go running screaming for the hills, you need to be prepared to act, because those represent good opportunities in the market, as they always have. Our final story of the day. Actually, hold on. We got some breaking news coming in here from Vechain. All right, so we do have... All right, we have some breaking news, guys. So this is from the Vechain Foundation on Medium. This is... okay. So the Vechain Foundation buyback address has been compromised, according to this Medium report from the Vechain Foundation. Approximately 1.1 billion VET tokens in this address were transferred to this address, the hacker's address. All the addresses associated with the said hacker's address have been tagged on Vechain stats. This list is being automatically updated as soon as the hacker sends any funds from the original hacker's address. All right. So the Vechain Foundation has been tracing these transfers. They have notified all exchanges to monitor, blacklist, and freeze funds coming from the hacker address and any withdrawals from the corresponding exchanging wallets. We have paid special attention to the few exchanges which the hacker has sent funds to. Launched an investigation, enlisted the assistance of Hackin along with its white hat community, started a security check, reported this to law enforcement in Singapore. You know what that means. So here we have Vechain taking a nice plummet from the news. Not dropping insanely. I don't know, like 13.71%. It's our ATR percentage on the daily. Bring up Quadrigo here. Yeah, so ATR percentage is about 10.59. So that's just a little bit above daily volatility. Daily volatility on Vechain is about 11% anyways, 10.5%. I wouldn't consider that a massively impressive buying opportunity. Let's just make a plan here, guys. Let's just make a plan for Vechain. Breaking down below the point of control. So let's set our worst Hail Mary situation here. So here we got VPVR. What do we got below this point of control? Well, we largely don't have anything, right? We largely don't have anything. We got our accumulation period right back down here. So what would be a savvy move then? What would be a savvy move here? Vechain, one of the best, depends on your perspective, but considered one of the best projects out there. So what are we looking for here? A 50% drop between the areas of, let's say, 50 and 35 sats. 50% drop. Could we get that movement off this negative news, or is this what we're going to see? All I know is that I don't think it would be a horrible idea. We've seen this with Matic. Matic dropping down, pushing up 100%, several hours. I do not think it would be a horrible idea to prepare for the worst. Now, do I think that Vechain is going to drop 50% off this news? No. Doesn't have to. But the point is, what if it does? What if you had a plan? What if you could capitalize on that? What if you were taking calculated risk in the market? So I don't think you guys need to do anything. If you're holding Vechain, I don't think you guys should go out and sell your tokens. Unless you were trading and you're just looking, for where we at. Again, we kind of looked at that VPVR breaking back down below the point of control. It's typically, again, a bearish sign. On the daily perspective, we are below the baseline. We would have been shorting Vechain from here. You can see we never closed above the baseline from that signal. Yep, here on this candle right here. And a little bit of drawdown, and boom. Of course, I don't trade on any exchange where I can short Vechain, so that just means we're out of the market. And again, we rode Vechain up pretty well. Waddah largely kept us out of this, and that's about it. Remember, we rode this trend. There's only been like a couple good tradable trends. This one and this one, everything signaled on. Had Vechain back in the day. That's about it. This is, again, this looks like a fairly normal distribution period after a nice run up. Nice little stop loss on here, and it looks like we are grinding back down below the point of control. So I would say have a good plan here. Have a good plan for this retreat back into the point of control. Let's see what we get off of this. All right. When we return from our break, we're going to reward our followers over there on DLive. So if you guys have been chatting or doing any donations of lemons over on DLive, we're about to give everything back and more. All you got to do is participate in the chat, and you guys can win. We do it every single day. So make sure to go give us a follow and go join us, the community over there on DLive at dlive.tv/cracking_crypto. Happy holidays, everybody. Nobody commented about my tree, or at least they didn't see that. But again, very festive this time of year, guys. We are going to take a brief break as we move here into the end of the hour, guys. If you guys have any questions, make sure to drop them in the live chat, and I will try to get to them in the Q&A section. The moderators are there to help you and put those questions where I can see them in our show notes. Let's see here. If you guys are enjoying the content, if you guys are enjoying the show, make sure to hit the thumbs up button over here on YouTube. Bless us with the YouTube algorithm, God. Subscribe if you haven't already. I think we're 50 subs away from 7K subs, guys, for 7,000 subs. Thank you guys so much for helping us grow over the years. It's been a fantastic ride with you guys. Again, I just hope that you guys are learning, becoming better traders, becoming more disciplined, and seeing the results play out in front of you. Nothing gives me more pleasure than to be here every day, working with you guys, building this community that we've built. If you guys, again, pop your questions in there. Links down below to anything you guys might need. We're going to take a brief break. We're going to go holler over at our friends at ByBit, who I want to thank for putting on the ByBit Brawl, all the opportunities there for individuals. And we're going to see what our friend Jason has to think about this, guys. So do not go anywhere. We'll be right back. This is Jason when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Oh, give it back!
This is Jason 6 months later after signing up for ByBit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com. And we're back, ladies and gentlemen. Thanks so much for sticking through the break. Did pull up crypto bubbles here. And again, we've got a great day in the alt market, guys. Engine up, or Enigma, excuse me. Basic attention token, Qtum, which we're holding. Neo, which we're holding. Let's see here. RLC down. Cheddar down. Grin up. Haven't seen that in a long time. Zcash, which we're still holding up. BNB up as well. Engine coin down. Vechain down. Lisk down. Again, I believe the Lisk, Lisk development has completely abandoned, shut down. All right. Let's do what we do, guys, and reward those viewers over on DLive. Let's distribute these rewards. Congratulations to the winners in advance. Now, our fourth and final story for today is going to be coming to get to us from the crypto globe. And the president of the European Central Bank, Christine Lagarde, has revealed the institution is looking to accelerate its efforts when it comes to digital currencies and to get ahead of the curve on stablecoins. And I just wanted to talk about this because this is, yet again, more information that kind of points out where we're kind of seeing the dominoes fall in terms of stablecoins, right? A lot of people here in America are, kind of yelling or very concerned that we're going to be seeing a stable coin very, very, very soon here in the United States, a Fed coin, if you will. But we're going to be seeing those experiments come in from other countries first. China, obviously, way ahead of the curve here, instituting its CBDC this year and rolling out more heavily next year. But the ECB severely talking about this as well. Really desiring to get ahead of the curve on this as well. And America largely staying silent on this topic. Of course, we have the international community kind of talking about this, but you have to look at where the incentives are. America has no desire for any currency to be utilized except for the United States dollar. In many countries, you still are required to purchase oil with the use of American dollars. Any international payment sent via SWIFT is currently still required to be done via the United States dollar. America has an absolute hegemony over the stable coin, if you would, of international finance, and that is the United States dollar. They don't desire for anything to change, and that's why we're going to see this innovation come elsewhere. And one of the things I just want to say as an American investor is that to my other American investors out there, and even people who aren't in America, just looking at this dynamic, diversify and branch out. If you are all concentrated in American stocks, American money markets, American-based investments, you can hedge elsewhere. I've talked about this before. I think, again, precious metals and cryptocurrency are a great way to hedge. I also think that other foreign currencies are a great way to hedge as well. Other concepts like this, other stocks, there are other indices that one can get into. These are all things that one can do legally as an American. Obviously, this is less of a factor for those not in America. But again, we're going to be seeing these experiments come in from China and the European Union well before we ever see anything like that in America. America has no interest. I do not think here in America we're likely going to be seeing any sort of digital currency sponsored by the United States government anytime soon. In fact, quite the converse. And again, more information continues to roll in. HBus, Huobi US shutting down just a while ago announcing that they were going to be pulling out. Overall, Poloniex has left America. Binance has left America. Bittrex is hanging on by a thread. Binance USA struggling to get liquidity. You know, all of these things happening, which, you know, again, kind of leaves the American trader required to either VPN or incorporate as an entity out and trade legally on exchanges like ByBit or BitMEX. Or any of the other exchanges that you want. And I've talked about this. I've talked about this as well. As an American, this is just a public service announcement. Do not trade on exchanges that advertise to Americans and offer you margin and derivative products. They're going to get shut down. I've seen this so many times. You're going to go there one day and that website's going to be seized by the Fed. You guys remember all the times it's happened. Being an anti-American American pays well. All right, big winners today. Wendy 2, Rickie Thompson, Forza World TV, Dare Crypto Meister, and Midwest Attempts over there on DLive. Congratulations, guys. Thank you so much for your continued support. You guys are awesome. I love every single one of you. Okay. So that's the scuttlebutt coming in from the ECB, guys. Stuff to be aware of. Let me know you guys' thoughts in the comment section down below, following the production or in the live chat. And it is now time for the Q&A section of the show, guys. We're going to answer your questions. The most pressing of the matter. And what do? We did reject directly from that area as we talked about. So 4 hour long, did not hit your stop loss yet. Let's see here. Again, the long was signal here. Let's actually take a look. Maybe it did. Let's see. So the high of this candle, I mean, it depends on the exchange. So on BitMEX or ByBit, you probably had a little bit of enhanced liquidity there. A little bit of a crunch, 72.1767. Yeah, so on Coinbase spot, your stop loss actually isn't hit yet. Pretty swift movement down in rejection, being sold back to VWAP, still above the point of control. You know, I'd be a little cautious about taking the immediate short off of this. You know, on the LTFs, I'd want to be getting below the point of control and VWAP there for just that kind of day trading perspective. From the daily, we don't have, or excuse me, from the 4 hour, we don't have anything rolling in. Let's go to look at the 1 hour. On the 1 hour, we don't either. On the 2 hour, of course, we don't. So yeah, just staying nice and steady and easy. Again, macro hedged. And that probably does put a little bit of a dent in what was looking positive on the daily earlier. Let's take a gander here at the daily. Yeah, so you can see that chunk down, again, rejection from the daily baseline. We talked about that reversal baseline bound short as well. That had chunked our green column down below the explosion level. And again, for those looking to take this trade, do not, if the daily closes and that looks like that. Stay away from that. So let's just be calm, patient, and see what we get out of this. Still no setup. Again, the only significant long trade, discretionary long trade that I'm looking for is the daily close above the tertiary to take to 8,000 and reshort from that level. Still macro. Overall, my largest position, my main position is I am short hedged. I have a short sell hedging all of my funds. I've been making BTC this entire way down. Re-put it on in this zone right here. It's wavered out of profit and into profit. It is currently on profit right now. So, you know, again, I'm pretty happy with that. Not making USD with that, but I have increased my BTC margin and am currently increasing that BTC margin. And then that BTC will appreciate on the way back up. And I'm trading other markets to gain my USD exposure right now to increase my USD margin because I got bills to pay. Not many. Financial minimalist, but still. Again, taking back a look at, NPXS having a nice little pop-up right there. Let's go look at NPXS. Old Poondy X. Oh, that's a bullish chart right there, boys, if I've ever seen one. Don't get left in the dust. Nice little consolidation period here, NPXS. I would be looking for opportunities to grab low. But, I mean, come on, man. 1 to 3 sat range, that's a little too low for me. This is not something that I would even consider trading. All right. Let's get back over into the daily chart and keep our eyes on this. Getting a little bit of a buy up on the VWAP. Okay. Let's go down to the Q&A section and see what you guys got for me today. NPXS, I already looked at that. Good. You know, the only comment I have on that NPXS chart is good luck, man. 1 to 3 sat range. That's too rich for my blood, my friend. We've got a request for Neo from Wally, Zhao from Bitcoin Millionaire, and Tomo by Crypto Rick. All right. I thought I saw quite a few like good questions. Maybe the mods missed them. Let me do a scroll here. See what I can't find. Hugo Chill says, "What was the score today? Was I close again?" I didn't see. 73-10. You were very, very close, man. I think you were second place. Rickie Thompson won with 72-58. It was 72-69. So I believe that did put you in second place. So your crystal ball is sharp, my brother. Satoshi Nakafomo says, "Not good, brother. I've lost $13,000 and I have $719 left. Do you think I can recover with my $719 left?" Sorry to hear that, man. The answer is no. Well, okay, let me be a little bit more correct. The answer is yes. You can trade 719 back up to 13,000, but clearly not the way that you were trading, man. And I think that the best thing for you to do in that scenario is, first off, don't be overly depressed by it. Everybody, myself and every serious trader that I've ever met or know has incurred a massive loss and really took in the pill early on in their trading career. It happens to everybody. It is absolutely inevitable. What you absolutely need to do, though, the difference between somebody who quits and just never touches trading again and is like, oh, trading is for fools, blah, 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 and then the people who go on to be professional traders like myself are the people who are hard-headed and say, okay, what can I learn from that and never, ever do that again? And the rule there is money management. Your trades weren't bad. You might have had bad trades that led to that, but it was your money management. If you have a disciplined system of money management, it would have taken you a very, 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 very long time to lose that amount of money. You need to reduce your risk per trade. You need to really seriously look at how you're trading, at your trading strategy, and just go back to basics, my friend. Build a system, join us in the group, my friend, or just join the Discord, start talking to other systems traders, and start building something that will generate you consistent profit, because the method that you've been utilizing clearly isn't working. So my absolute heart goes out to you, my friend. I've been there, and I just want to let you know that you absolutely can come back from a loss like that, but not as quick as you may think. You're not going to trade that $719 back up. You need to pause from active trading. You need to go to the books. You need to go to the back testing. You need to build the system out, test it, and then deploy that in the market. And it's going to take you quite a while to get that back. I mean, you're talking about a 25x essentially, right? That's going to take some time, man. There's not a moonshot out there. Looking for moonshots is most likely what got you there in the first place. And I don't know that, so I don't want to, tell you what you did or didn't do wrong. You know. And what you need to do is just take a hard look at the trades that you made and the position sizing that you did and the risk management strategy that you deployed and realize fundamentally that you can never do that again. Ever, or you will have the same results. So, huge silver lining. It happens to everybody. And the impetus on you needs to now be, I need to learn from that. But, also severely, this is also, if you've been doing this, if this is also a time for you to revisit overall your investment strategy, look at increasing your personal skills. But please, take that as an absolute lesson that needs to be learned and a wake-up call to what you were doing before in the first place, my friend. Stay disciplined. Keep your head in the game. You'll be okay. AG asks, do you guys offer mentorship? If so, how can one sign up for that? I emailed your site a few days ago, but I haven't heard back from anyone. Well, I didn't see an email. We respond to all of our emails very quickly. It's possible that we did miss it, so I apologize if we did so. We do offer mentoring. You guys can check out premium.crackingcryptocurrency.com. There's a list of all our tiers, what's included with each package, and there is mentoring listed in the bundles as well, depending on what length of time you want to sign up for us, what commitment you want to make as a trader, because that lets us know how to allocate our employees' time, our analysts' time to helping you out. But yes, we absolutely do. Crypto Rick says, hey, Justin, you said before your max risk per trade was 2% and lower with less confirmations. When there are multiple pairs looking good to trade, what is your max combined total risk at any one time? Couple discriminating factors there. First off, I've created an advanced position size calculator, and with the help of our devs, we've turned that into a huge advanced trading journal. and built-in position size calculator that all our premium members have access to. It's probably one of the most valuable things out there. It changes people's lives. It's changed my life because it's just a one-stop shop for everything that you want to be looking at. Sorry, let me get back over to Bitcoin. Wow, nice movement there from BTC right there. Just liquidating anybody who shorted that movement right there. Told you guys to be cautious on that one. Hey, baby. That was the opportunity to get S, I would say, to get S on that retreat. Baby. Let's see here. It depends on if you're trading spot exchanges, then you need to look at how much actual capital you have accrued. Or overall, the answer to your question is 20%. 20%. If I'm taking risk per trade and I'm doing 2% risk per trade or whatever risk per trade, I will only go to 20% max risk. Right. There are times where I've gone slightly above that, obviously times where I've been far below that. But that's it. And that's for my trading portfolio allocated to trading cryptocurrency. And then the other factor, and I talk about this in the Ichimoku video, I talk about this obviously in the course, is discretionary position sizing, is how you actually learn to split that risk between trades. And that's something that we go over in the course. Jack had a 10+% trade on EOS this week. Glad I closed in fiat and fat profit. Good to see, man. Mr. Ether and Der Crypto Meister are pointing out that the government is putting a band-aid on a sliced artery with the repo crisis. Okay. Thank you, Ferguson. Appreciate that, my friend, saying I did a good job on the rundown. Wally, my friend, thank you so much for the $20 super chat. I'm sorry that I missed it. I see it in here. And we also have a 19 krone donation from Mr. Don Candon. I'm sorry that I'm missing these guys. I don't have my headphones on. I don't like to be distracted. I'm going to have to figure out how to get some kind of alert, something popping up on my screen. But thank you so much for the $20 donation, Wally. Thank you so much for the 19 krone donation, my friend, good Don Candon. Wally says, pretty please add Neo USD and Neo BTC to your analysis list. Learn, earn, and don't get burned. Of course, my friend. Of course. We get into that right here, right. Your activity. And I didn't see... Don, you must have sent that yesterday, my brother. I'm sorry I didn't see your comment, man. Please don't be disheartened. Sorry that I missed that. All right. If any of the mods find any other people are saying that that candle only happened on Coinbase with its thin order books. I quite like the but see, that's more concerning. That's more concerning because you want to look at the volume. That's where, of course, it can be an abnormality. It can be an aberration, but the derivatives markets, if you're looking for where the moves originate from, right? They occur on the spot exchanges because you have better data there slightly because the volume is a little cleaner, right? You can't manipulate the volumetric data like you can with margin. So anybody that's actually putting pedal to the metal on the spot exchanges are doing it with actual the real money, not synthetic money via leverage. So that's one reason I do like looking at the spot exchanges for signals. Okay, now let's go look at Mr. Neo BTC. And I just want you to know, Wally, like I showed earlier, I'm in this one with you, baby. I'm in this one with you, bro. To the moon, Neo. I can fly, Jack. I could fly. Okay, so but for real though, looking at Neo, let's bring up. So on the CC EMAs, we broke down below the 55 exponential moving average, consolidated there for just a little bit of time, right at this level of support, right where I had entered into the market. I discretionarily bought the dip or whatever on Neo, whatever you want to call it, but it was a discretionary reversal trade. I had plotted out this level based on VPVR and my demand zone that I had calculated for Neo. Bought that level, held it throughout this chop and consolidation, and we are now seeing that nice break above. Now, one thing that is a little concerning is this pattern that we're seeing. I'm actually going to hide price, and I'm just going to look at the EMAs here. So we have the 13, the 21, and the 55. Now, this is not going to be influencing my trade, but I just want us to be aware of this. We see this a lot with the interplay, in my analysis anyways, with the interplay between all of these baselines, right? So for the primary strat, for a lot of traders, 13 EMA being their primary baseline, 21 being their tertiary, and the 55 being their secondary. Where what we'll see, and this is just a little bit more macro, not necessarily related to this trade, but does give us a little bit of pause for how far along we're going to go. Big, huge, long trend breakouts occur after consolidation and breakdowns after extended distribution, right? This is Wyckoff market theory. Just, in very simple terms, it takes quite a long time for enough buyers to get filled before they're ready to push price all the way up. And it takes those buyers quite a bit of time for them to distribute before they're ready to take price all the way back down. So what we can often see is in a situation like this where we're coming off the tail of a trend, and we've made our way slowly down to our 55 daily moving average. When we tend to get this bounce off, so you can see that it looked like we were just heading for these cross unders, the 1355 daily cross under, which is a very strong bearish signal in my opinion. When we get the deflection here, when we get this bounce off, we often put in a lower high, and then our moving averages move up a little bit, and then we get that cross under. So something from the macro perspective, I'd be a little bit concerned about here, right? More often than not, this does not lead to a renewed higher high. This does lead to a re-opportunity for individuals to sell at a good price. Now, that doesn't mean that we can't trend up quite high. Let's look at where price is relative to its previous high. Let's bring back price. We've got quite a ways to go, my friend. We've got quite a ways to go here on Mr. Neo. I mean, we could go up. I mean, we got another 10, 15, maybe even 20%. If we run. And we could run higher than that. That's why we just wait for a good exit signal here. Now, being fair, on the daily, we don't yet have expanding volatility. We don't even have a confirmed regular with my strategy long signal. Now we had a one conf trade over here with Minx crossing up. We now have commodity channel index crossing above the dynamic zero line. So that's a buy signal from CCCCI. We also do have a stronger buy signal with Minx crossing the zero line as well. It's trending long signal, right? Rather than its initial or impulsive long signal. But Waddah Attar Explosion, which is designed to protect us, is really tapering off this bearish and just now flipping to bullish, man. It's just going to take a while. So if this does trend quickly and strongly, which is what crypto tends to do, this would be a trade that regularly I would miss out on. But I'm in this one with you, man. Let's take a look at... So we're not quite to my TP yet. I'm looking again. I'm looking for us to revisit this level right here around the 1300 level, a little bit higher than that, just a little bit. And that's where I'm going to be securing half of my profit and moving my stop loss to break even. I'm probably trailing my stop loss as we continue to move up. So this is not a confirmed win for me yet. Again, subjectively analyzing how far price will go by what time is a coin flip. But again, this looks good. I'm in this one with you, man. There's really nothing TA-wise that sticks out at me besides that I would say cautionary here. This deflection of the EMAs of the 13 and the 21 from the 55, kind of looking like they were going to cross under, a little bit of consolidation and getting a pop. I look forward to this being a little bit of a sustained pop again, maybe over the next few days or weeks, another 15 to 20% potentially here from Neo, and then we'll be securing those profits, letting the market go where it decides to go. But overall, I would still be, that's not enough consolidation for me to think that we've accumulated enough. This is a reactionary bounce. We can see this from the VPVR. See, we just came right back down to the point of control, getting a nice impulse, reactionary bounce off the VPVR. Let's pull this back a little bit. That's a little too much. Bottom of the value area. Let's zoom in just in the consolidation and bounce up. And no, we just want the breakout. Actually, if we're looking for upper boundaries. Upper boundary would be pointing us here to around 1374, which is a little bit higher than what I'm targeting right now. All right. And I would be cautious if we break back down and get down below the point of control around 1200. I would want to be out of the trade at that point in time. That would be an invalidation. But I'm looking for this to kind of run up, give us a higher low, and then we'll just kind of see. We might get a couple more bounces from that level as well. But I think that it's looking like we would break down, especially if we get that cross under as well, which would confirm that movement, which would probably happen on the next movement back down because we're already quite close there. So macros, definitely something to pay attention to and be aware of. Short-term or meso, we've got a good trade on our hands. Let's ride it. Thank you for the request, my friend. Looking over at gold. Let's see here. Again, coming in off a little bit of a distributive pattern right here, a little bit of consolidation. Let's see what the indicators are saying. We do have a long signal on gold. Let's see here. See, we got one here, had a little bit of drawdown, a little bit of screwery. Let's see, from a tradable perspective, yeah, we were good. Long right here. We would still be long on gold. Looking at take profit targets, still roughly about 1491, 1505, and 1520. So looking for anywhere from 1 to 2.5% on gold. Looks pretty good. Waddah Attar Explosion giving us a nice explosion level. It's been a fairly choppy area of the market. You still got to take the signal. Let's see if we got anything coming in the form of our EMAs. That's the only thing that concerns me was that 1355 daily cross under right there. So again, kind of that same concept with Wally's Neo there. Again, doesn't mean we can't get that nice. Doesn't mean we can't secure profit on this trade. Trade the potential pop, but be ready to pull your trade if we get down here below 1470, 1469. Yeah, with this, kind of with the chop, with the range right here, this does look like a decent little breakout, but just be prepared to have your trade invalidated if that is the case. This area, gold's been pretty treacherous lately. It's easy on the way up, easy on the way down, easy on the way up, but the last month or so, it's been rough. A lot of chop. But this, I can't deny, this looks good, and of course the indicators are signaling for the trade as well. So we talked about those take profit targets. Stop loss coming in at, entering right now, stop loss coming in at 1455, but be prepared to invalidate that trade on that close below 1470. TOMO to the tether for Mr. Crypto Rick. I wouldn't enter in here. We got the long signal over here on TOMO. Yeah, this is the confirmed long signal right here. And let's pull up that baseline just for verification. Yeah. Actually, you could have taken the 2 conf over here. Could have taken the 2 conf over here and rode most of this. Low risk, and then entered into full risk here. You would have captured some great profit. Yeah, this is not looking... I don't have a continuation signal or anything right now. So far, this is just a nice trade to the upside. Can this run? Yes, but I think that R to R wise, you've had a reversal baseline bounce. You're continuing to get reversal baseline bounces. So retreats back to that baseline are tradable. So retreats currently back to 33.89 are tradable. But yeah, I just don't like entering into trades that look this overextended to me, especially after something like this. But again, you can watch for those retreats to 33.89. What do we get from our EMAs here? Did we get that? One thing I would say would give me a little bit more confidence would be a nice buy signal. If we get that 1355 crossover, right? Then you buy the pullback to the 55 and Bob's your uncle. So be watching those levels. 32.61, 33.89. You can buy pullbacks to the daily baseline. Be ready to close your trade if we close below that. And overall, I would be watching for that next strong signal, which would be that baseline crossover. Pablo asks, I'm concerned about BTC longs on BitMEX already reaching all-time highs and they keep skyrocketing. Can I have a look, please? Yeah, we've talked. I've got you can check the last 2 days, check the timestamps. I talked about BitMEX longs extensively. I think we also have a breaking Bitcoin bits. I think that might be even coming out tonight or tomorrow, covering that topic as well. here's the thing. Bitfinex longs and shorts are wildly divergent from the rest of the market. But, we have the ability to track something on Bitfinex longs and shorts as well that we don't see on other markets, which is the ability to kind of look at what less margin, lower margin spot longs are doing. Where the other markets, you can have access to a lot of leverage. So, it's an easy number to manipulate. But again, I don't view that as a good signal. Generally, when longs are, and we can look at BitMEX funding, it's extremely high. Or not extremely high. It's not really high yet, but it is positive. It's been more positive than negative in this consolidation period. And when BitMEX funding is high and longs and shorts ratios is high, again, at an all-time high, it's not a good sign. That's a counter trading sign generally. Now, again, people can use it as a trending confirmation indicator saying, well, the majority of the pack is going long. With the longs to shorts ratios being high, it's letting you know that the majority of traders are long, right? Retail traders that are actively letting their trades be tracked. Institutional investors aren't letting people track their orders. Not in that way. And that is the flow. That's the market order flow. It is those larger traders that direct the course of the market. They're the ones that provide the impetus, right? It's very hard to manipulate a market in a direction that it doesn't want to go. In fact, some would say it's impossible, but you can nudge it along in the direction that you want it to, and people can panic because humans are easily manipulated. But typically the way that I always look at that is that the crowd is almost always wrong. So when everybody's long on something and screaming for the skies, it's generally a good time to be looking for the door, right? Now, of course, we're at a low relatively in Bitcoin's price. We've had a large movement to the downside as opposed to a large movement to the upside when people are typically longing, meaning that the end of the trend is near. So you can potentially be looking at this trend confirmation indicator. I don't have a strong opinion on this, right? The sentiment analysis is pretty murky for me right now. It is concerning, though. It is concerning. And so I still, again, that's why from a macro perspective, I'm hedged. I'm protected. Doesn't matter what happens. I'm cool. And I think that you guys should be as well. It's the best thing to do. It's a treacherous area of the market. Protect yourselves. Sean Lovive, hopefully I said that right. Sorry if I didn't. He says, I always have purchased Bitcoin and held. I'm fearful of a drop from here, but I've never traded. Where would you set up a hedge short from this level to protect my BTC? You can do this on whatever derivatives exchange you want to. If you'd like to use ByBit, there's a link down below. You can get some free margin bonus from that. It's your preference. You can do this on BitMEX. You can do this on OKEX. You can do this on Bitfinex. You can do it wherever really you like. But all you have to do is this. Take your Bitcoin. If you're holding it, you should be holding it in cold storage somewhere off an exchange. So the first thing you need to do, step one, if your Bitcoin's on a spot exchange, on an exchange, and you're just holding, get it off that exchange immediately. If you're holding, it's risky and irresponsible of you to be holding that Bitcoin on an exchange. Only hold your crypto on an exchange if you're actively trading or plan to. So move your money to a cold storage, whether that's a Ledger Nano X, whether that is a paper wallet, whether that is Armory or some desktop wallet, which is a better solution. But again, you want it in cold storage. You want it offline, right? You want your private key generated offline. That's ultimate protection. So do that. And then what you want to do, I would recommend doing that just to get it off the exchange. You'll have to send another transaction this way, but the other way to do it is, open up your derivatives account and you need to calculate how many dollars you have in Bitcoin, right? So let's say you have $10,000 worth of Bitcoin. Let's say you have 20, 30, doesn't matter, right? So let's just say you've got 9,000 to make this easy, right? This is the way that I do it. So you've got $9,000 worth of Bitcoin, right? You're going to want to take 1/3 of that Bitcoin and send it to the exchange where you're going to be opening up your hedge. And you're going to want to send the other 2/3, the majority, to cold storage, right? Or you can send it all to cold storage and then send out, right, to the exchange, whatever. Probably the better, safer private option there is obviously sending 1/3 first and then the 2/3 to the cold storage. That way you don't have the UTXO outbound from the cold storage address. And then all you do is just open up a short equal to the amount of money that you have. So for example, in this scenario, you had $9,000, you're sending $6,000 worth of Bitcoin to cold storage, $3,000 to ByBit, and you're going to go to the perpetual exchange and open up a short, a $9,000 short with 3x margin, 3x leverage, right? So you're going to have a liquidation price that is very, very high. Generally don't have to be concerned with that. If you want to be safer, again, I think you don't really need to go this far, but you can send half of your money to the exchange. Then you can use 2x margin. I would actually just use cross margin, to be quite honest with you. That way, if it's like $1 off or something and you can't get the 3x, your next jump is 5. So just use cross margin and you'll be good. But that's how you do it, man. You hedge with a short contract. And again, Trunker has a great write-up on that. I'm going to be working with another one of our members who's a mathematician to publish some more information on this, to look over some graphs and stuff to help you guys better understand this. But the concept's very simple. When you're hedged, if Bitcoin tanks, you will not make money, but you will not lose money. And when I mean money, I mean USD, right? The USD value of your Bitcoin remains the same because although the dollar value of your spot holdings, what's in cold storage, will drop, your position on the exchange is racking up BTC equivalent as prices going down, meaning that you're going to have more BTC at the bottom, even though that BTC, each independent Satoshi, is worth less dollars. It averages out. You'll have just as much money. That's my recommendation, my friend. That's how you hedge, and I think that's one of the best things that people can do, and get very, very comfortable in that practice. That is the difference between being reliant on the market and, again, being protected and not being able to worry. Two more chart requests, and then we're going to pop off for the weekend, guys. This is Link. Nothing, again, very similar to what I said yesterday on Link. Nothing positive here. Closing below the baseline. Minx is about to give us a cross under below the zero line. CCI is bearish. Waddah Attar Explosion is weakly bearish. No shorting opportunities here, but just something I'd stay away from. Rejection from our tertiary baseline here. Pull back to the baseline. I don't see an opportunity here unless maybe you want to take the gamble on trading the range, maybe back up here, maybe a 5% trade. I think there's better opportunities. I would stay away from Link for right now. And the last request coming in on Monero from Sanjeev Dasgatra. Kind of a similar scenario here. XMR looks pretty interesting. Whenever I see price contraction like this, I know that there's going to be a pop coming. We've had some nice pops to the upside. Overall, though, yeah, the only reason I keep this here is because I nailed this one, right? This is my long-term macro, catching that 50% on Monero right here. The guys in the group, this is all the way back from early 2019. Yeah, this just doesn't look... I want to see the confirmation. I want to see the confirmation breakout, right? I want to enter on something like this. Overall, the Waddah Attar Explosion is telling us to take no trades here. Overall, the indicators are actually bearish. CCI is bearish. We need to see price above. I want to be pretty concerned. I want to see price above $54, and then maybe we can take it to that $55, $57. I don't feel that there's anything here with Monero right now, my friend. Unless you're just taking a discretionary trade, you're seeing price contraction, in which case you want to be buying it at the lows anyways, which is not where price is at. Well, it's not too bad. Discretionarily, potentially there's a shot here, but I would want to take the trend on this because if it can pop one way, it can pop the other. And there's just, again, this chart is not very attractive, and there's charts out there that are attractive. All right, good questions, guys. All right, you guys are absolutely fantastic, man. Thank you. And thank you for joining me for another exciting episode of Breaking Bitcoin. I really appreciate the questions. If I missed anything, you can leave it in the comment section down below. I will do my best to get back to you within the next 48 hours if it's a good question. Or just leave your comments, your thoughts, sarcastic remarks, opinions, or death threats. You can leave all that stuff down there as well. If you guys would like to see some of these results, if you guys would like to begin walking a path toward consistently profitable trading, if you guys would like mentorship, if you guys would like to use our tools and follow our rules and learn our rules, make sure to check out everything that we're doing at premium.crackingcryptocurrency.com. We are, I'm proud to say, the fastest growing education and trading group on the interwebs, and it's because of people like you who support us, who get the word out, and continue to grow as we continue to grow as a community. So thank you guys so much. We couldn't do this without you. You guys are amazing. If you guys enjoy the content, make sure to give us a like, subscribe to the channel. If you have not, follow us over there on DLive or our Twitch. And of course, you can follow our Twitter. If you guys are trying to catch us on the go, you can of course check out the podcast. Yes, we got a podcast at breakingbitcoin.money and review us. We are on Spotify, iTunes, Google Podcasts, Google Play Music, Spotify, Podbean, all of those. We're all over the place. Catch us anywhere. There's literally no excuse. We've got a lot coming out for you guys. I'm going to have the Silvio Macaulay Algorand interview is coming out this weekend. I know, I'm sorry you guys had to wait so long. There were some technical difficulties there, but we're going to be publishing it this weekend. You guys can look forward to that. Following that very quickly, Naomi Brockwell, Samson Mao, Zcoin, Pi, Casper Labs, so many interviews from San Francisco Blockchain Week. We're pushing forward on that. Going to get those out to you guys as well. You guys are absolutely fantastic. Trade safely. Join us in the Discord because we do not do shows on the weekends. Working hard with the streamers to get everything ready for them to start streaming on the weekends, but that's still a process, still working on it. And again, the way that we move, the way that we do things, when we finally implement things, we do it the correct way, and it's done the right way. And do things right the first time, you don't have to redo them later. All right, looking forward to chatting with you guys in the Discord. Over the weekend, trade safely, be careful out there, and I will see you guys back here on Monday at noon p.m. Central Standard Time. It's been a pleasure, guys. Enjoy your weekend.